In financial accounting, we communicate results of our operations through financial statements. These financial statements are typically used by external users. These external users need to know that these financial statements can be compared. Let's say that you as an investor are looking to invest in two companies. Let's say you're looking to invest in either Google or Apple. You look at two sets of financial statements prepared by Google and Apple. How do you know that these two financial statements are the same, that you're looking at the same type of information? You know that they're the same type of information because both those reports would have been prepared using financial reporting standards. All that is whenever we prepare accounting reports, we have to abide by a certain set of rules. These rules in the United States are called Generally Accepted Accounting Principles, or GAAP. Every company that prepares financial statements have to make sure that they adhere to GAAP. GAAP is only used in the United States, but now we are a global economy. There are lots of companies that operate globally. Walmart, Google, Microsoft, every single company has international presence. Now, those companies, when they prepare their financial statements internationally, they have to adhere to the rules of that country, whatever the country that they are presenting financial statements. So let's say that Google has to prepare financial statements in China. They have to abide by the generally accepted accounting principles that are prevalent in China. Because of that, if a company operates in 30 different countries, they will end up preparing 30 different sets of financial reports or financial statements based on each country's rules. To help solve this problem, the major countries of the world got together and created what we call the International Accounting Standards Board. And they all agreed that moving forward, every single country will prepare their financial statements based on International Financial Reporting Standards, called IFRS. United States currently has not moved to IFRS yet. SEC has mandated that we move to IFRS in 2015. So by 2016, we should be preparing financial statements using the International Financial Reporting Standards. Since we have not moved to IFRS, we are going to be preparing financial statements based on GAAP. So everything you learned this semester will be GAAP based. The good news is that GAAP is almost identical to International Financial Reporting Standards, so when we do move to IFRS, there will not be much change between GAAP and IFRS. The reason we have not moved to IFRS yet is because of the massive cost involved in transferring all our GAAP-based reporting to IFRS. However, once we do move, there's huge benefits. Think of the situation earlier where I said if a company is operating in 30 different countries, they have to prepare 30 different sets of financial statements. Now, once you move to IFRS, you will only prepare one set of financial statements, and that will be valid for every single country that is operating under IFRS. Another benefit of IFRS is that, let's say that you are looking at a set of financial statements for a company that operates in Australia. You will instantly be able to analyze that company because you know that the set of standards that they use to prepare those financial statements will be the same as the ones that we use to prepare our financial statements here. So for the rest of the semester, whenever we prepare financial statements, we are going to be preparing our financial statements in accordance with GAAP. GAAP stands for Generally Accepted Accounting Principles.